Welcome to Financial Revelations. I am David Safransky, your weekly host here at Financial Revelations. You can find us on Twitter at FI Revelations, FI Revelations. Josh will put it up here for you. And you can also email questions, concerns, anything you want to Joshua at epsf.com. Joshua at epsf.com. I want to let you know before we go any further that on January 18th, we're going to have a workshop in person in Independence, Ohio. You can call and make a reservation for that. I want you to be there. We could probably take up to a couple hundred people. That's where we're going to limit things at. I am going to charge people a fee of $15. 100% of your fee goes to charity. So what I want to do is we're going to go to the Amazon in June, and we're going to take some pastors and worship leaders that they typically can't afford the trip, but I want them to go and see this and be around it. So we like to support their trip, and it's going to go to that and to the well drill itself. So all of your money will go to charity. I want you to be there. We're going to talk about finance. I am on the radio Thursday mornings with Brian and Janelle on WCRF 103.3 in Cleveland. You could listen to us no matter where you're at on the Moody Radio app. Brian's going to be there. We're going to do a little TED Talk. We're going to talk about money, and we'll take your questions. And I'll also answer things about specific stocks because you'll be there, and I can kind of drill down on it a little bit if you want to have a specific stock question. Well, this week was a really big week in finance, and it's a really big week for two reasons. There was a push and a pull in finance this week. And something that we've been talking about for quite some time actually happened this week. And in a normal world, it would have had a fairly large impact on financial markets. But this week, it was muted. And I'm going to tell you why in a second. The thing that happened, the push was the Federal Reserve held their monthly meeting. They have a November meeting. And in this meeting, so they meet on Tuesday, November 2nd, and on November 3rd, at about 2 o'clock, they have a press conference where Chair Powell comes out and he talks about what they decided, if anything. In the past, it's been, we're going to keep things the way they are. But I have been saying for a while that this meeting in particular was going to be the beginning of tapering their bond purchases. The Federal Reserve, which is a quasi-public institution, they're private banks, but the voting members are appointed by the president, confirmed by the Senate. So there's a government influence, but they're private banks that handle our money supply. These private banks have been buying about 53 cents of every dollar that the federal government floats in debt. So when the federal government sells a bond, the Federal Reserve is in there buying 53 cents of every bond. And the reason they were doing that is because they're putting money into the system. They're creating money supply, expanding the market. It's called quantitative easing. And by not buying the government debt, they're going to start tightening the money supply. And they're going to tighten by about $15 billion a month. And this is really setting up the first rate hike in the spring of next year. Probably March or April, we're going to get a rate hike. Now, this is important for a couple of reasons. One, the last time Chair Powell tried to tighten rates, the market said, we don't like that. And it was in the first full year of Donald Trump's presidency, and the market sold off in December very substantially. It was a really bad month, kind of ended the year on a sour note. And they reversed course early in January. The market took off, and it's been really, up until the pandemic, it was just, we were flying. We were really doing well. The market was fairly accepting of this. And there's a reason that they were fairly accepting of this, because also on Tuesday, there were elections nationwide, some governorships, a lot of local stuff here in my hometown of Vermilion, Ohio. We voted on mayor and school board and things like that. But there were some pretty important elections, particularly the governor of Virginia. Virginia had not had a statewide Republican elected since 2009. And really, it's kind of a locked blue state, but they were in trouble. And so they brought out the big guns. They brought out President Obama. President Obama went there. Michelle Obama went there. The Clintons went there. President Biden went there. The vice president went there. A lot of Democratic operatives were there also. And lo and behold, they lost the seat. And the way that the market looks at this is because the Democrats had invested so heavily in Virginia and they lost in a sweep, they lost the governor, they lost the lieutenant governor, and they lost the attorney general. The lieutenant governor, by the way, some people claim that she was elected by racists, is a black woman who was a Marine, and she is a Republican. But the market looked at this because the Democrats invested so heavily in it. It's a repudiation of the Biden economic agenda. Is that true? I don't really know, but the market certainly looks at it that way. And so for the market, the spending packages were going to be very problematic because the Fed is not going to be able to tighten fast enough. They're not going to be able to tighten fast enough the money supply to counteract the spending plans that the Biden administration had. Those spending plans right now, they could be resurrected. I'm never say never in politics. But right now, those plans are kind of dead in the water. And there's a couple senators that have dug in their heels against the spending plan. And the Republicans only needed one, and they've got more than one. And what it also does is if you're a Democrat and you're kind of on the fence on this spending to begin with, and there are many of them, it gives you cover. So the Fed essentially tightened money supply on Wednesday. The voters said, we don't like the spending plan. Now moderate Democrats have all the cover that they need to kind of distance themselves from really some out of control spending that we don't need. The pandemic, there's still infection, and there's going to be infection for a while. I don't think we're totally out of the pandemic until next April, May. But essentially, these emergency measures that we've had in place are no longer necessary. The emergency spending that we've had in place is no longer necessary. What we need now is we need to unleash this economy. We need to not raise taxes. We need to increase oil and gas supply from our own supply. We should be drilling. So before these spending plans, before this election, the spending plans were kind of on life support. Now they're DOA. And it's going to be that way for a while. And I think it's really good for America because, as I have said many times, the people that are running the economy right now in Washington, this is a PhD study on economic stupidity. If all you have to do is look at this, and if you did everything opposite of what they're projecting, I think you'd have a pretty strong economy. So it's a major loss for the Dems. It gave the Fed a lot of cover to be able to tighten money supply. Now, they didn't know this result was going to happen on Tuesday, but certainly they did Wednesday. So if they voted Wednesday, I think they probably took it into account. And the risk now to the economy, it is inflationary. And the Fed did kind of update their language on inflation, saying that while they still believe it's transitory, the transitory period is going to be a little bit longer than what they had to deal with initially. And in a normal world, what they did on Wednesday would have caused what we call a market readjustment, which is really a euphemism for a sell-off. And none of those things happened, even though they said inflation's going to be here a little bit longer. It's still transitory. We're going to tighten money supply, because they had the cover from the election. And so maybe they did vote on Wednesday after they knew the results of the Virginia election. New Jersey, they didn't know yet because New Jersey was just decided yesterday or today. And the Democrats held that seat. I don't think that the seat was as critically important. So we what they want to do now is they want to kind of cool down the economy. They want to tighten money supply. And the risk now, is stagflation. And stagflation is inflation higher than normal, which we have, and a floundering economy, which we don't have right now. Now, where we could get a floundering economy is if we got the tax hikes, oil prices continue to rise, energy prices in general continue to rise. We're about to go into winter. You know, what happens is, man, like clockwork, they're tightening the energy supply, which is true. This administration is tightening our energy supply. And lo and behold, you're going to have a colder than normal winter. It's almost like it has to happen now. And what you're going to see is if that happens, I don't know what the Farmer's Almanac says, but be a good time to check that. If we do get a colder than normal winter with higher than normal energy prices, with inflation, I think you will see some stagflation, because for me, it's not going to really affect me. I'm going to keep my house at whatever temperature I want because I'm not at the lower end of the socioeconomic scale. But for those people who are, if they are driving 15 miles one way to work and trying to heat their house and feed their family, all of a sudden they have to make some economic choices because they still have to go to work. And you can't let your house be 32 degrees. So what are we going to cut back on? Well, we're going to cut back on what would normally be discretionary spending. Maybe we cut back at some things at the grocery store. And that's how you set up a really stagnating economy, when people have to make economic choices on things that they would like to do versus things that they have to do. You have to go to work. There's no way around that. You have to go to work. And so if your gas is costing you 25% more and you are already living on the edge of your budget, so you're making this much and you're living on this much, what do? You can't cut out gas. You can't coast halfway to work. So you're going to cut out other things that you would have normally bought. That creates a slower economy. And I think the setup is really looking like that could happen. And that is a worry for me, because when you have to heat your house and eat and drive to work, you're not going to do things that you don't have to do. You're not going to go to the mall. Even though you can't really go to the mall in California right now, I want to let you know, people in California, if you're watching, eventually you will be free again, like we are in Ohio, in Florida, in Texas, Louisiana. A lot of states are open. You don't have to wear a mask anywhere. I was in California a couple weeks ago, and I forgot my mask. I went into a grocery store, and I love going into these Chinese groceries. They have such cool stuff in there. Everybody was looking at me weird. I'm like, what is going on? I thought maybe I had something on my face or something. Well, it turns out I didn't have something on my face. I forgot my mask in my car. Everybody was looking at me like I had horns growing out of my head. I just forgot my mask. Because in Ohio, you don't have to wear a mask in the grocery store. I don't wear a mask anywhere. You will be free again. So those are the things that we're going to be talking about in the future. I want you to remember, you can always get to us, joshua@epsf.com. And to make a reservation for the workshop, January 18th in Independence, you need only call 440-934-2195. 440-934-2195. Just tell whoever answers the phone you want to make a reservation. We'll write your name down. You don't have to pay yet. You pay when you get there. Every dime of what you give is going to the mission. It's 100%. Everything else is going to be covered by other people. So we'll have a little coffee there, maybe some cookies or something. 6:30 on a Tuesday night. You're going to love it. Brian will be there from WCRF. And we'll have a great time, and I'll get to shake some hands and answer some questions. So I am David Safransky. This is Financial Revelations. Thank you for watching.